Morning. Welcome to the third installment of the Three Capitals webinar series. My name is David Sachs. I'm president of the Ottawa branch of the Oxford University Society. And we are most pleased to be hosting today's webinar with a very special guest speaker, Dr. Mark Carney, who earned a DPhil from Nuffield before moving on to other accomplishments. We'll be introducing our speaker in a few moments, but first, a big hello to our audience of approximately 430 registrants joining us from parts of Canada, the US, and Mexico. As you know, the Three Capitals webinar series is co-hosted by the Oxford Alumni Societies of Washington, D.C. and Mexico City under Presidents Sean Denniston and Karine Yuki, respectively, as well as being co-hosted by Ottawa. And we have people today joining us from those three societies, as well as from other university alumni societies in the US, Mexico, and Canada. At the time, too, I'd like to acknowledge the help of the Toronto-based Mosaic Institute in helping us with our tech, and the liaising efforts of our executive member and Vice President Akash Maharaj. So as said, a warm welcome to everyone. To conclude these remarks, let me go over our agenda today. Dr. Carney will speak for approximately 15 minutes, and then we will have 25 minutes of question and answer. If you wish to deliver a question to Dr. Carney, please use the question and answer tab that you'll see at the bottom of your screen. You'll deliver your question in writing, and my colleagues and I will do our best to select a variety of cogent questions to be delivered vocally by me to Dr. Carney. While you're typing, if you hit paragraph return, it will send the message. So don't create a second paragraph in your question if you wish to conclude it, unless you wish to conclude it. All right, so without any further ado, I'd like to introduce John Matheson, who is a member of our executive committee at the Ottawa branch, who will introduce our guest speaker.
Thank you, David. Dr. Carney. Good morning, everyone. We at the Oxford Society of Ottawa are honored to welcome Dr. Mark Carney as the final speaker in the Three Capitals lecture series. We owe him a particular debt of gratitude, given he's also delivering this year's BBC Reef Lectures. His second lecture, From Credit Crisis to Resilience, was released yesterday on the BBC's website. This spring, Mark was appointed the UN Special Envoy for Climate Action and Finance, and he was named Finance Advisor to the British Prime Minister. He recently assumed the role of Vice Chairman at Brookfield Asset Management, where he leads the environmental, social, and governance investing strategy. From 2013 until earlier this year, Dr. Carney served as the first non-Briton governor of the Bank of England in its storied 326-year history. He was governor at the Bank of Canada from 2008 to 2013 and helped steer Canada through the subprime mortgage crisis. He was also chair of the Financial Stability Board from 2011 to 2018. In terms of his credentials for being our speaker today, Mark read at St. Peter's College and completed his doctoral work in economics entitled The Dynamic Advantage of Competition at Nuffield College. Many of you will recall our annual dinner in January. During his time at Oxford, a young Mark Carney played goalie for the Oxford Blues. One of his teammates on defense was David Lametti, Canada's Minister of Justice and Attorney General. According to Lametti, as goaltender, our speaker today was always cleaning up the defenseman's messes, or one could say bailing them out. We all hope Dr. Carney found it good practice, because today he's one of the leaders who will help clean up the biggest mess of all, the most urgent and dangerous crisis in human history. He is a voice for climate change action who brings to bear a unique economic expertise and an urgent vision for promoting climate action in the marketplace. Please join me in giving a warm Oxonian virtual welcome to Mark Carney.
Thank you. Thank you very much, John, and thank you for limiting the Oxford hockey stories to that description. Thank you, David, as well, and I want to thank the Three Capitals Society for having me. It's a great initiative, and I want to pay tribute to your ability to maintain the Oxford spirit of intellectual rigor and friendship through what has been a very difficult year for everybody. And what I thought I would do in terms of remarks is I thought, given the spirit of the Three Capitals, given the nature of the audience, I might offer a few reflections on the nature of international cooperation in the past and going forward, and obviously with a particular bent on or focus on what we're looking to accomplish over the course of the next year on climate change, addressing climate change. But I'll go back to what I suspect for a number of us on this virtual meeting was a familiar sight, because I recall when I was a graduate student taking the Oxford Tube to London, as many of us would have done, and I would always keep an eye out for a certain site, a certain landmark on the ride, and it wasn't necessarily the dreaming spires of Oxford or Marble Arch, some big site in the capital, but it was a otherwise nondescript street of row houses in Headington, and many of you will recall there's one which has a giant shark sculpted into its roof. So there's a giant great white shark that is attacking the roof, and I subsequently, investigated. Of course, it piqued my curiosity. Investigated, and this sort of public display of aggression. The owner of the house had commissioned this and built it somewhat to the dismay of his neighbors, but he had done so after the Chernobyl disaster. He'd been a CND campaigner, anti-nuclear campaigner. He'd done it after the Chernobyl disaster as an indication of just how fragile we are, how problems can go, how quickly problems can go across borders. And global challenges can quickly become local. Now, since then, and not solely because of that, but it helped reinforce an interest I always had in both the positives and the negatives about openness and international cooperation. And the question I think we faced over the ensuing decades is, how do we cooperate to solve global problems? And I'm going to make some suggestions on that. But to what extent can we protect ourselves from these sharks, metaphorical sharks, whether it's on the nuclear side, whether it is for pandemics, for example, whether it's cross-border flows on financial instability, which we saw with the financial crisis, and I'll say a few words on that. And of course, on the other hand, if we wall ourselves off, what do we forfeit in terms of opportunities, in terms of ideas, creativity, and access? And in this regard, we have this challenge between independence and true sovereignty, sovereignty in terms of delivering better outcomes for our fellow citizens. And I think it's fair to say that the global system has been under strain in recent years, partly in the wake of the financial crisis, partly through greater fragmentation on the trade side. And it would be a mistake to ascribe this all to the actions of a few rogue individuals or unusual events. It is about getting this balance between openness, sovereignty, and democratic accountability. And my experience, one of the things that I had the fortune, didn't seem like the fortune at the time, but in retrospect, sometimes things seem better, was to have been through the financial crisis, initially as governor of the Bank of Canada, and worked a great deal in the aftermath of the financial crisis. And I'll just maybe put this in some context, which is, and I'll tell another brief anecdote, which is that after Lehman Brothers had failed in the fall of 2008, September 2008, we basically limped into a meeting of the G7 a few weeks later. And so central banks made a series of initiatives, including an emergency coordinated rate cut, in order to get to a meeting to try to figure out what, on a coordinated basis, we could do to shore up the system and start to repair it. And we came up with a plan, which necessarily involved backstopping the entire system. Ultimately, 15 trillion of money was put on the line in order for that. And what was striking for that plan, it was devised in the G7, but it then needed to be socialized in the G20. It needed to be agreed by the G20, which was the first time that the G20 became the operative body. And this was with finance ministers and central bank governors. But President Bush showed up to the meeting unannounced, showed up to the meeting, and he spoke very well. I thought he recognized that, I mean, his words were to the effect of, this is our responsibility. We made some mistakes. We're going to do everything that we, the United States, are going to do everything necessary to clean this up, but we need your help because we can't do it alone. And so we need everyone to stand together, et cetera. And what was striking was the last bit, because this was the shift from the hegemon to a broader system and a broader sense of responsibility. And it was a shift also in terms of the regulatory response that came afterwards. So it wasn't led by the United States. It was a much more cooperative effort that was taken underway, or that was undertaken, and was a form of what I would say cooperative internationalism. And I had the responsibility, after Mario Draghi left to become the president of the ECB, to lead something called the Financial Stability Board, which is a informal grouping under the G20 of all the treasuries, finance ministries, said different ways, central banks and regulators. And what we did was we got the principals, the heads of all those organizations around the table, in many cases physically, to hammer out over 100 reforms that we globally agreed. Now, nobody had to implement those reforms when they got back home. There was no treaty, there's no requirement. But the fact that they had been part of a process, that they'd contributed to it, that they'd heard the debates, and that they expected the others to do so, gave ownership, and has led to quite a considerable improvement, in my judgment, in the financial system. So making it safer, simpler, fairer across the G20. And it survived. I think we can now say it survived, and in fact has been part of the solution. A extremely severe test in COVID, a test that we hadn't anticipated in terms of the orders of magnitude of what it hit it. And so this point of embracing the diversity within the system, having a cooperative process, having the ownership that results from it, is part of the way that we can address some of our global problems. Now, let me turn to climate, because that's where the analogy is. And what has happened with climate, I mean, this audience will know, but it does bear repeating, which is to move from a formal treaty-based approach, the Kyoto approach, with binding obligations that didn't turn out to be binding in the end, to clear agreement on objectives at Paris 5 years ago this Saturday, the agreement in Paris to target less than 2 degrees warming, with a stretch target of 1.5 degrees, and countries to outline their efforts, their nationally determined contributions, what they were going to do to achieve it. And then a very honest appraisal of the add up of all of those efforts, which even at the time said, countries want to get to less than 2 degrees, but even if they do everything they say they're going to do, the world's probably going to end up just south of 3 degrees, 2.8 degrees to be precise. But a process set in train where there is a retention of sovereignty to try to address an international problem, and a transparency and an objectivity to that process with a shared objective. It was supplemented at Paris, and it is being reinforced for Glasgow with bringing all levels of society into the process, So non-governmental actors, local governments, the business community as well, the financial community, very importantly. And the financial community had been not entirely apart, but quite remote from this process until very recently. And I'm going to finish my remarks by just outlining what our objective is for the private financial community for Glasgow, and then we'll open it up to discussion. So the headline is, the core objective is, we want every financial decision to take climate change into account. So what do we mean by that? We want professional banks, insurance companies, asset managers, asset owners, pension funds, etc., to have the information and the tools and the markets they need in order to manage climate-related risks and to invest and seize the opportunities associated with the transition to net zero. So that starts as a foundation with information. It starts with reporting. At Paris 5 years ago, Mike Bloomberg and I launched under the G20 something called the TCFD. This is a form of reporting by companies of their climate-related risks. We're now in a position where we have $170 trillion of investor and bank money behind the TCFD wants this information. It's been refined to that point. And so for Glasgow, what we want to do is to make it mandatory across public companies so there's a consistent information. The second pillar we're looking for is much better risk management by banks and insurance companies around this. And that's a responsibility of those institutions themselves, but also their supervisors and central banks that oversee them. And thirdly, there is an issue for investors in terms of how they seize the opportunities in this transition to net zero. Because we will not get to net zero in a niche. This is not just about instantly moving from a brown economy to a fully green economy. It will require huge investment on a per annum basis. A reasonable estimate in the energy sector alone is something like $3.5 trillion per year for decades. But on top of it, it will require virtually every company to adjust their strategy and to move to decarbonize themselves over the coming decades. And that whole economy transition creates a new way of looking at value for companies. In other words, those companies that are above the line in terms of the transition towards net zero are detracting from value. Those that are below the line are creating value. And those who are above the line but can get below the line can create further value still. And the judgment of investors has to be which companies to back, and how to allocate capital accordingly, again, across the entire economy. And the last thing we need to do is we need to build some missing markets. And that includes for cross-border investment in nature-based solutions and carbon offsets. It includes an investment in resilient infrastructure in emerging and developing economies. And it includes a number of insurance markets to close the protection gaps. So the strategy, to try to keep my shark analogy, is not to wall ourselves off, but to build these networks of cooperation, to build these markets in service of our oceans, in service of our planet, and in a way that makes it more orients all institutions towards society's objectives. And I'd underscore that these are objectives that are the law of the land of 126 countries and counting, to achieve net zero in a way that benefits all our citizens. So with that, I think we're still on time, and I'll hand back to you, John, or John and David, for to manage the questions. Thanks.
Over to you, David. David, you're on mute.
Yes, here we are. Thank you, sir. Dr. Carney, thank you very much. Richard Remillard has asked, what role do you see China playing with respect to the issues you have outlined?
Well, it's a crucial issue. I mean, and as in so many things, China is absolutely critical to a successful outcome here. President Xi's commitment at the UN 2 months ago for net zero commitment for China by 2060 in carbon was very significant. It's the first time that an emerging economy has committed to net zero, and consistent with that, there are a series of measures that are coming to put them on that path. That's the first comment. The second thing in terms of China is that they are the source of some of the most important innovation and investment in a series of technologies, including zero emission vehicles, solar power, and wind power. And that's all in the positive side of the ledger. So the objectives there, the policies are moving in that direction, and the technologies are there. The challenge, of course, is the scale of China is the largest emitter in the world, still has substantial coal and other heavy emitting activities that are being invested in or that are building, and so the speed with which the transition adjusts. So China is essential. And I guess the last point I should make is that on the financial side, one of the things that we have done over the years is work very closely with particularly the People's Bank of China, which has taken the lead in developing a more sustainable financial system in China. And some of the biggest innovation, and for example, in the green bond market, in terms of the nature of climate-related loans and others, have come from the Chinese authorities, and we're looking to extend those developments over the course of this year.
Thank you. A question from Christopher Wilkie, which makes reference to your 2 recent Wreath lectures on the BBC. There seems to be a tension between poor market pricing of public or socially valuable goods versus the more fundamental problem of the desirability of public good pricing at all. On the latter, you have noted the example of US versus UK blood donation voluntary work in the context of, and this in the context of climate change, particularly carbon pricing. Do you have any further observations on how to address this paradox?
So thank you. First off, thank you for listening to the Wreath lectures. I appreciate that, and asking a very relevant question from them. So yes, there is that tension. There are some elements, particularly around charity or philanthropy or so-called sacred goods, where their pricing in effect corrodes elements of their value. So David, you rightly give the example of the classic example of blood donation. We've seen it with paying for charity. There's quite substantial evidence that volunteers raise more than paid philanthropy, if you will. And so there is that set of issues. I think partly where I think about this, and I'm not sort of settled on it, but I think where it applies quite, where it's quite relevant is pricing nature. And I'd make a distinction between pricing nature on an accounting basis, so we can see whether or not we're adding to our natural capital, our biodiversity, or depleting it. And there's quite substantial evidence that we are depleting it, and depleting it very rapidly, even while we build up our physical capital and human capital. I would make a distinction between making those prices for an accounting purpose, as opposed, but not bringing them into the market system so that they are pari passu with financial prices. So there's value to so-called monetization. Again, from a natural capital balance sheet, but not mixing that monetization with financial prices. And this is something that, if I can put a plug in for the Dasgupta review of biodiversity, which will come out in January. Partha Dasgupta, the Nobel laureate for the UK government, is produced really quite a monumental work on a much broader set of issues around biodiversity and public policy around enhancing biodiversity, but touches on these aspects quite clearly. And that will come out in January, and I'd recommend on that and how we think about the policy for it. I won't go on about this because I suspect there'll be other questions on it, but carbon pricing does play a role in addressing climate change, but it isn't as simple as the carbon price.
Thank you. Carol Morrison has asked, Alberta's economy depends so much on oil production. How do you think they could change to a green economy?
Yeah, it's well, I am an Albertan, and I'm actually born in just north of where the oil sands are, and very aware of the importance of hydrocarbons to Alberta's development. I think the other element that I'm quite conscious of, and Albertans are justifiably proud of, is the track record of innovation and entrepreneurialism in that province. So when I was born, the concept that the oil sands could be made into a commercially viable fuel was just that. It was a concept, and for many saw it as quite unrealistic. And of course, it has been a tremendous commercial success. But we are in a world where we're undergoing an energy transition. There will be roles for traditional hydrocarbons for a period of time in that transition. But the imperative is to see where the world's going. The classic Gretzky quote, where the puck's going, not where it is. And the world is moving to lower carbon, ultimately no carbon fuel alternatives, many of which some of the expertise in Alberta, across Canada, is highly relevant. And so think in terms of hydrogen as a crucial fuel for heavy emitting industries. Think of direct air and carbon capture technologies, which also quite resident. A lot of the world leading expertise is actually resident in Canada, and the importance of developing those. And also, if I make a last point, and this is, was one of the challenging ones, is thinking about preserving our carbon budget. A lot of this is about preserving our carbon budget to create the time to make the transition, including some of the innovation. And in different geographies, different fuels are much, much more impactful on conserving that carbon budget. So displacing coal in Asia is hugely impactful in terms of the benefits. So fuels such as natural gas that can help with that can be critical. Of course, ultimately the move is towards renewables, and building up that expertise, including in Canada, is essential. Last point, if I may, just to take a big step back. I think Prime Minister Harper used to call Canada an energy superpower, and he's absolutely right. And he called it, we're an energy superpower in Canada because, not just because of one fuel, but because of the breadth of the fuels, from those I mentioned on the renewable side, those fuels of the future, including hydrogen, those technologies such as carbon capture, but also hydro, also nukes, small modular reactors, and others. That expertise is all resident in Canada, as it is in some other countries. And what we need to do in Alberta and beyond is to develop at pace that expertise while we transition from existing or what have become traditional industries.
Thank you, Doc. Ronald Stevenson has asked, have the voices of Indigenous peoples been brought into the conversation about net zero investments?
Yes, but the criticality is that in all of these discussions and in all of these solutions, and so let's also be clear. This is, we're in a situation where we need solutions, and so it's bringing together all actors, all stakeholders to agree on this, understand what the opportunities are, what the options are. They're not always the first best options. Where we would like to be. We would all like to jump overnight to a net zero world if we could, and indigenous people in all of 196 signatories, well, 195 at the moment, signatories of COP have a critical role to play, yes.
Alison McPhee asks, what does the pathway to mandatory disclosures look like to you?
The pathway to mandatory disclosure, there's a few ways. A couple jurisdictions, the EU, the UK have effectively legislating. The UK announced that last month, and others will use so-called comply or explain disclosures. So in other words, if the securities under securities reporting rules, you will either have to make the disclosure or explain why you don't. We expect that the IFRS, which is the body that develops standards for reporting in 140 countries, which is currently on financial reporting, we expect that they will, they're currently consulting and are going to develop reporting standards for sustainability reporting, starting with climate. And so within a few years, that would become operative in those range of jurisdictions. So we think there's a range of pathways, but by, Alison, by Glasgow, and through the G7 and G20, this is going to be reinforced with the Italian presidency of the G20 and the G7 presidency of the UK. Countries are going to be asked to make a commitment to one or more of these pathways.
Uzair has asked, is there a solution that seems most effective in reducing the carbon footprint of the private sector in Canada?
Is there a policy or a solution?
Well, Uzair has listed three possibilities, maybe as prompts.
Okay, we don't have to give me the three possibilities, so maybe I'll just, it's a good question. I think, the first answer is, and I'm not hedging, is there's no one solution to this issue. That just underscore the whole economy aspect of the change and what's important. And I think the government of Canada just reinforced it with, I guess it's current legislation, John, I'll speak under your control, going through the House, but actually legislating the net zero goal, which then various solutions sort of cascade down from. We need to what do we need to do? And I'll give a couple of examples. We need to electrify as much as possible, and we need to turn our grids to 100% zero emission as soon as possible. And the combination of those two will mean quite considerable investment in new generating capacity, grid intertie capacity, and others. That's not the one solution, but that is a core solution, because obviously that unlocks not just reducing emissions that are happening today, it reduces emissions through transport, through zero emission vehicles. And it actually makes, if we grow the grid properly, the generating capacity properly, it makes Canada a no-brainer destination for new manufacturing, because you're instantly in zero carbon manufacturing, scope 1, scope 2. And that is, again, back to the energy superpower comments, and I'll hand back to you, David, a moment ago, that is within our grasp with deliberate policy at the federal, provincial level.
Thank you. A more philosophical question from Jimmy Liu. In your recent Reith lecture, you noted the four most expensive words in English. This time is different. So basically, are we in danger of falling into that crevice now? How, in your view, could we reverse this tide, which seems so prevalent in history, and reset our hyper-financialized and commodified view of what is valuable?
Yeah, it's a great question. I recommend all four of the Reith lectures I gave to answer that question, because that's what I'm trying to do. So he's put his finger on it. One of the things in the narrower world of finance, you really do have to bind yourself to the mast and protect yourself against the metaphorical sharks, and recognize that the next time won't be different. That there are these cycles of exuberance, that you have to plan for failure. And when I say you have to plan, I mean the authorities, the banks, and other institutions have to plan for failure, even though they don't know from where failure will come. And I think, sitting in the middle of this COVID crisis is the classic example. All that said, I'm now going to take the other side philosophically, because it's relevant to this point. There are cycles in finance. There's cycles of exuberance and pessimism, and it's part of human nature, and it can be amplified through the system. But one doesn't have to be fatalistic about issues such as climate change. We can make the weather. You can choose we can plan, not just plan for the future. We can plan the future. That's what, and this is part of the point of the Wreath lectures. We are getting to that tipping point as societies with 126 countries committed to net zero, huge social movements behind it. That resets the relationship between the overall objective, achieving net zero, and the methods of getting there. So we're not trading off planet and profit. We're addressing climate change, and profit will come by solutions to get us to net zero sooner than as soon as we can.
Thank you. Rebecca Katzen has asked, and this is a question that's mirrored in a number of other questions received. Is it really possible for financial markets to address climate change without a price on carbon imposed by national government?
Yeah, it's possible up to a point, Rebecca, but they will be far more effective with a credible and predictable price of carbon. This is a point that Janet Yellen, who's the incoming Treasury Secretary in the US, former head of the Federal Reserve, and I made in a paper 2 months ago, which is that actually what we're putting in place in the financial sector, those tools, that information, those markets, will be much more effective if there is a predictable path of climate policy. And the easiest way to represent that is around a path for a carbon price. And what happens in those situations is the market pulls forward adjustment. You invest today so that you're profitable in the future with the higher carbon price. And when the carbon price is higher, the adjustment is that much less. So we really do save a lot. And even it's detailed in the paper, but by moving forward the date on net zero through credible carbon pricing is worth 5 percentage points of GDP. I mean, the numbers are very large around credibility.
A question from Guagua Bo. How would you or anyone incentivize OPEC countries to get on board towards sustainable goals?
Well, I think there's great diversity in the OPEC countries. I think a number of them see that increasingly recognize, including Saudi Arabia, recognize that there is an energy transition that's coming, that is underway. That there will be a role for cheap and low carbon oil for a period of time. And so the question is, are you competitive on that? But on a related basis, that there's a need to develop new energy sources alongside. And it's more difficult for some other major energy producers, without question. But it's coming, and it's coming, it's coming partly on the demand side, and you see that in the write-downs by major energy companies of their future, the value of their reserves because of the future expected effective oil price adjusted for carbon, and demand according to that. And it's also coming through likely, and this goes back to the broader theme of international cooperation, through border adjustment, tariffs, and other trade measures that aren't going to happen overnight, but will happen down the road. So if you know where the future is heading, starting adjusting today that's part of the conversation, and helping with that adjustment is a huge element of that.
A question from Magdalena Soul. Is there an opportunity offered to us by COVID-19? Does it provide an opportunity that would actually accelerate the capital mobilization and higher interest in ESG at the moment? Or is its effect a dampening one?
Yeah, it's a good question. And if you'd asked me that 9-10 months ago, just at the start of this crisis, I would have given you an economist answer on the one hand. On the other hand, I think the jury's in on that. It's absolutely, without question, accelerated the focus on resilience, on sustainability, on solidarity. And what we need to do is have dynamism of the economy in service of those values. And that's part of what that interaction between what society wants. Let's deal with the climate crisis. Let's move to net zero as quickly as possible. What governments are legislating, net zero objectives, and arranging the private sector, particularly the financial sector, and making it transparent, whether that sector is part of the solution or part of the problem, or individual institutions are part of the solution, part of the problem. So one of the things, and I'll just reinforce this point, we want to have in place by Glasgow is an ability for anybody listening, anybody, any of our fellow citizens, to be able to tell whether their hard-earned savings are with banks, with pension funds, with asset managers, wherever they are is that money being invested or lent out in a way that's consistent with the transition to net zero or not? And forcing those institutions to answer that question, to think about and answer that question. And if the answer is, I don't know, then it goes down to your personal preferences. Do you care that they don't know? Or would you prefer it to be with somebody who is actually trying to address this issue?
Great. Paul Ballard has asked a question which overlaps with a number of others. How can traditional biofuels, such as firewood or coal, still massively important in low-income countries, be sustainably replaced, especially given deforestation?
Especially given, I didn't catch the last bit, David, sorry.
Especially given deforestation.
Yeah, well, particularly around coal, the headline numbers around coal, if we look at a global basis, is that 80% of global coal reserves are unburnable if we're going to move to net zero consistent with the 1.5 degree objective. And what that says is that, just to pick on coal, is that we need to very quickly develop and invest and bring on scale renewable power or alternatives, but particularly renewable power to electrify those areas. Now, the good news is that it is now the case that the levelized cost of solar and wind in virtually every jurisdiction is lower than coal, which was not the case 5 years ago. Certainly, it was far from the case a decade ago. So the opportunity becomes there. It's becoming more a question of zoning and capital availability. And part of what we're trying to put in place is a system that allows for those flows to happen. And let me make one quick point, which is this is one of the value of the carbon offset market, a cross-border carbon offset market, because the switch from coal to renewable or coal to gas, that difference in terms of emissions is worth something if you have a carbon offset market, which is one of the initiatives for COP, which is to develop that voluntary market. And with 130 institutions working on it right now, it has real momentum, and it will help with that necessary but also just transition and economic transition towards renewables in developing economies.
Dr. Carney, I'll give you the option not to accept this question. This is from an anonymous attendee, which says something like, what is your take on Mexico? More so because the president AMLO is doing new refineries and not focusing on green energy.
I will say that from COP's perspective, that we are looking to work and are working with all countries to try to achieve a good solution, and we have less than 12 months, and we'll continue to engage with Mexico and all to come to solutions. And look, there are challenges in a number of jurisdictions, but there is real momentum behind this, and it's going to be increasingly difficult it's going to be increasingly obvious if a specific country is not trying to be part of the solution.
Dr. Carney, I have to thank you for your generous time.
Oh, thank you.
We've reached the witching hour of 10:44 a.m. And in order to offer a formal thank you to our guest speaker, I'd like to call on Sean Denniston, President of the Washington, D.C. chapter of the Oxford Society.
Thank you, Mark. for those insightful comments and how climate change does affect us environmentally and economically. Good morning, good afternoon, and to our Indonesian caller, good evening. I'm Sean Denniston, acting president of the Oxford University Society of Washington, D.C. I'm delighted as the middle country in our group to thank Mark and speak about the Three Capitals collaboration. I'll admit I can't help to think of Pierre Trudeau's quip that the United States is like sleeping next to an elephant. No matter how friendly and even-tempered, one is affected by every twitch and grunt. I can only imagine what Mexico has said about the United States over the years. Well, the Mexico City, Ottawa, and Washington, D.C. chapters are equal partners, and the elephant in the room is Oxford. And it's very much awake with all it's doing with the COVID vaccine and its important research and scholarship. Well, I don't know exactly how we got together this past summer. It was related to our respective chapters engaged during how to keep our respective chapters engaged during the pandemic. We quickly realized that calling ourselves the NAFTA chapters wouldn't do, and we became the Three Capitals. Akesh, Corinne, and I felt OUS chapters in the three North American capitals would allow us to leverage our influential and diverse alumni and offer North American-wide programs for our respective members, participate together in real time, and the richness of discussions that would follow. While I hope our collaboration will continue in some form, this Oxford chapter would like to extend an open invitation to our Canadian and Mexican Oxonians to participate in any of our virtual events and the in-person ones when those start again. Again, Mark, thank you.
Thank you. Thank you very much, John and David and everyone for the excellent questions. I'm sorry we didn't get to all of them, but if there's this level of and expertise and enthusiasm from the Oxford alumni, it further reinforces my optimism that if we all apply ourselves over the coming years, we actually can address this great issue.
Thank you, Dr. Carney.
Thanks very much.
It falls to me to follow up, to follow that act with my concluding comments. Thanks again to Dr. Carney for sharing with us his valuable time today. And thanks to the hundreds of people who zoomed in to watch and deliver, as was said, such thought-provoking questions. I'm sorry we could get through only about 7 of the 25 or so questions that were delivered. While we're enjoying the euphoria of the moment, and as Dr. Carney said, the expertise and enthusiasm of Oxford alumni, I'd like to remind everyone viewing that this sort of stimulation is periodically available if you will get involved with your local Oxford Alumni Society or otherwise your local university alumni society. So thanks again for a most stimulating morning, Dr. Carney. Thanks to our viewers, and thank you, Oxford, for ultimately having made it all possible.
Exactly.
That's goodbye from me.
Thank you. Thank you, David. Thank you, everyone. Bye-bye.
Bye.